Hey, what's good, everyone? Welcome to tonight's Trainforce training. This one's loaded. It's not just key level mindset. There are some very practical key levels that Dad is going to show us in the second half of this training, and how last week's training about auction market theory translates over into these levels. So get ready to take some notes. I'm going to hand it straight over to Dad, and we're going to dive into it. Get your notepad, get ready, enjoy.
Yeah, here we go. So I'm going to share my screen straight away. That's all good. Here we go. Share. Then move a few names around. Nice to see some of your faces. I can see Yako there. I can see Elise. And I'm sure the others hanging around. So I've got no notes for tonight. I'm just going to, I've got a few, like you call it, there's a saying, licorice all sorts. I want to talk about a few things. And so it's, not one big title. Ty will think of a good title for the video. But just to reiterate a few things and just talk about a mistake I commonly made, especially in my first early months of trading, learning to trade, going back some years now. And that's a difference between having a personal bias and a market bias. Sometimes we can just have this personal bias we've made up. We get a bee in our bonnet where we think price is definitely going down or price is definitely going up. And I remember it was one Saturday morning, got up early to trade. I was off to play golf afterwards with some mates, 18 holes of golf, but I got up early. I was just really wanted to get some trading in, and prices dropped, and I was convinced it was going up again. And even the MACD that we're using then was, showing divergence. And I clicked buy and got stopped out. And of course, I clicked buy and got stopped out. I did revenge trade. Early days wasn't a huge loss size, but I did lose some money. I think about 4 times I tried to get into a buy. I was just absolutely convinced price was going up. I had a personal bias that, the downtrend was over, the uptrend was starting. I was going to get in early, and that didn't end well. You can imagine how I felt playing 18 holes of golf, feeling very frustrated over losing. My golf didn't go well that day at all. But you have to be careful that we don't develop a personal bias where we just somehow think price is going to go up or price is going to go down. Now, I did it on a Saturday morning a while back. Now, fortunately, I didn't make a loss, but I'll show you what I did. So I'm going to go look at the calendar. It was on Saturday the 21st. Let me press the calendar. Here we go. It was Saturday the 21st. I think that was the day. So I'm going to go all the way to the 21st. And I'll show you the mistake I made. I'm trying to remember exactly what I did there. So if we look over here, and I'm just going to put on the replay so I can get just the 3-minute lining up at the same time. There we go. So I'm not going to look at the 3-minute yet. So that is the 3 minutes. I'm just going to focus on the 1 minute. So I'll show you what I did. Somehow, no one's immune from this. The mistake was I focused mainly on the 1 minute chart. So I was convinced, and I think I did this twice in the last month. Fortunately, I didn't lose, but I looked at the chart like this. I got on. I should have focused more on the 3 minute. It's obvious on the 3 minute, but I was looking at the 1 minute, and I was looking at price action around about here. And then I saw, boom, wow, this looks good. We're above the POC. Price has rejected the previous day, value area low. Now that is a great level to reject. When you reject the value area low prior day, there's a high probability chance that it's going to go up to the prior day POC, which was sitting right above there. So I think I jumped in on this candle here, boom, press buy. And once I got to about 30 pips, I thought we're going to race away and crack my target. And I think, I got in somewhere around here and had a 60 pip target. Yep, there we go. With 60 pips, had a 60 pip target. Let's just go to that. 60 pip, I think I may have jumped in on this candle. And there was a good 60 pips, at least 60 pips here. Yeah, I was I think this candle, jumped in. Once, you can see I'd raced off, once I got to 30 pips, I thought, here we go. I moved my stop to +4. And you can see what happened here. There was a big pullback. This candle wicked me out for +4. And you know that feeling, you get stopped out for 4 and it goes on to hit your 60 pip target. So I wasn't happy. Okay, it wasn't a loss. I had 4 pips. So, gee, I really thought it was going to go up, and visions of going even higher. And so I waited patiently. I wasn't going to revenge trade. So here we go. We came to here, and I thought, look at this. We've got a big round number. We're rejecting, the 233. And look at this, the mid volume band. How many candles is that? There's about 7 candles. I'm in. This time it's definitely going to hit the next, the mid VB, and didn't go down to the Friday POC. So I don't know where I got in, and once again, I was up 30 pips again. When at 30, played again, same. I moved my stop loss to +4. And of course, look what happened. Came and stopped me out, except this time I was happy because it reversed and went the other way. So I was kind of thinking, what is going on here? I just had this bee in my bonnet. It was going up. There wasn't much to say. The bands were running. There was a slight downtrend. The mid VB, pretty even. The lower VB possibly trending up. But I wasn't looking at the big picture. I developed a personal bias that price was going to go up to where it was. But if we look at the 3-minute chart at the same time, so where I was taking those trades was around, that first trade I took was over there. If we now blow up the 3-minute chart, let's just put that on the screen. So if you look at the 3-minute chart, I mean, what is the market bias here? Is the market bias up or down? My personal bias was market was going up, but I didn't really look at the bigger picture. If we look here, we can see here, you can see going right back, there was a high going back at 2:45 in the afternoon. Then it made a lower high, which was, 9:15. Then it made another lower high, 2:45. There was another lower high around the time, just before I got on the charts, another lower high. And you can see also a lower low, lower low, lower low. And when I was trying to take trades, I was somewhere over here. I had it in my mind, I think because it had maybe, come off the 1 hour low, that it was going up again. But can you see how the market bias is definitely trending down, whereas I developed a personal bias that price was going to reverse and go all the way up again. So that's something just to be very aware of, that we got to, I'm just going to, let's stay in the replay. I just want to get both screens back on. So you can see again, if we just look at this chart, if we just look too crunched up, that's why, a lot of the time I like to just trade with the 1 minute on my lower screen and the 3 minutes. I do look at the NAS. Sometimes I have both splits. Then I put the 3 minutes on my top screen. But in the morning, I hadn't done that. I was maybe looking too greedily. I had the NAS 1 and 3 on my monitor, and I'd split the 1 and 3 on my main screen without looking further back. Always looking left is the key. So I thought I'd leave that as the first thought. Beware of a personal bias. When you simply think price is going to go up, therefore I'm only looking for buyers. I was clearly wrong. I mean, fortunately, if we just left this trade play out, I did then eventually wake up, and I did take, I can just stop it here. When price broke, I think I put this on our feed going back then, when price broke below the London low and it broke below the H1 low, what candle was that? It would have been on this candle. Yep. When price closed below the London low, I entered in, and I did end up taking 30 or 40 pips, but it took me a long time to wake up. I mean, if I was really awake, I would have been looking for sells, earlier on in the move, not right down here where, a lot of the market, a lot of the volume had been taken already. But again, just be aware of that, don't get a bee in your bonnet. I've still make that mistake, and I've done that twice in the last month. Fortunately, I got stopped out for, just for a few pips, didn't make a loss. But be careful of that bias, think not personal bias, what is the market bias? So once more, look at the 3 minute, one glance, you could see we shouldn't have been looking for longs here necessarily for buyers. Now, obviously, when the lines are parallel, we can scalp both ways. But if you just look at the picture here, look on the 3-minute, the 2584 sloping down way above there, 987 sloping down way above there. Where I was trading, I was way below the 233, etc., etc. So that's my first point. Be careful of developing a personal bias and just sucking out air that price is going up. Look at the bigger picture. Look what the current market bias is. All right, so that is my first point. So I'm going to leave that. Let's go back live. And I want to look at something else that I did put in the note there is to be sure what auction you're actually in. So I'm going to look at the 3-minute chart here. And Tom, maybe you can just keep an eye on questions. And I found a good example on the 19th of March. So I'm on the 3-minute charts. I'm going to go to the 19th of March. This looks right. This looks right. Here we go. So the point I want to make here, I want to make a good point. Let me come up with some water. I will also combine a bit of my previous point about market bias. So what I taught on last week, I talk about, how price moves between markets. And, every trade is like a market auction market theory. So we can see even here, prices rejected the upper volume band. There was a trade to the mid VB, to the middle volume band. Price also rejected the mid VB, went straight down to the low VB, and eventually it came down to our oversold band. And so there are clear trades you can identify. So for example, we can see a nice pullback here. We can see prior week POC. I love that. That is a key level. It also kissed the H1 high. So we can see a number of things firing off. There was an auction between the H1 high. It went from H1 high all the way down, look here, to the H1 low and hit there. There was also, this is kind of stacking. Look at this wonderful stacking. We've got the lower volume band, not quite in the middle, but we have the prior week POC, a clear rejection. The obvious auction would be to the prior week VAL. And so there's multiple auctions taking place. So just in this page, there's 1, there's 2, there's 3, there's 4, the prior POC, there's 5, even minor ones from the VAH. There are multiple auctions taking place at the same time. So again, the point I was making last week talking about auction market theory is that we need to know which auction we're in. But what can also help prevent us taking bad trades is making sure that an auction is played out. So I'm kind of setting you up a bit here. So I'm on the 3-minute chart of the US 30 because if you saw this particular chart here at what's happening, you could definitely develop a personal bias as to the down move is finished. I mean, look, price dropped hundreds of pips. And it seemed to settle around about the prior week value area low, or around the H1 low, or around the POC. So if I was looking here, I would be thinking, gee, this is bottomed out, it's moving up. Look, it's rejected. Even if we just looked at this point, it would look like we've rejected the value area low, prior week value area low. We also rejected the H1 low. We've rejected the POC. We are going up, and then it pulled back again. Same over here. Oh, double bottom. It's rejecting the value area low, rejecting also, the VAL, the session one. It's rejecting H1 low. We're going up again, and it's pulling back. And all the way along here, look, here's a buy signal. It's come back to the same levels. It's even had this big wick, that tells us sellers try to push price down. Buyer said no. Price is now even oversold on this weekly band, rejecting those same levels. We have to be going up. But if I now play this auction out, is price going to rocket up? So let's just see what happens here. Whoa, that did not go to what I thought it would go. If I was sitting on a live chart now, that would have been a problem, because it's done completely the opposite. You see, I was developing a personal bias here based on our good rules, testing and rejecting key levels, but yet it dropped further. And I've purposely hidden something from you just to get you to think of it, because I deliberately cut my screen short. But if we look up here, right at the top, we will see what actually started this move. And hopefully you can see on the video, on the Zoom here, we can see that, price moved up hundreds of pips. It did hit the overbought band, but yet we can see you have this little purple dotted line. And what does it say? Prior week mid. What caused this down move was the prior week mid. Now here it's pretty clear that this was the key level of resistance. If we see where it first began to test it, and we just timed, okay, that was the last touch, was about there. That is 2 hours and 48 minutes. So let's call it 3 hours. For 3 hours, price moved up hundreds of pips, then couldn't break above effectively and move further than the prior week mid, so PW mid. So what that tells me is that actually what initiated the move was the prior week mid. And the big picture auction on this page actually is not the volume bands. They did play a part. It wasn't necessarily the prior week POC or the prior week VAL or even the hour high and hour low. The real player in the game here was our prior week mid. And this is the reason, now I'm going to crunch it up a little bit, and this is the reason why price didn't reverse off here and move back up again. You could say if the H1 high was the high point of that move, yes, that would have been a safe trade. If the prior week POC was the high point, yes, that rejecting that level could have been a safe trade up. But hopefully you can get what I'm trying to say here. What initiated this move was the prior week mid. Massive. So almost 3 hours it spent at that level, multiple tests. So when it rejected that, that becomes a high probability trade that is going to find its way all the way down, look here, to the prior week low and even lower. And so this here, in this particular trade, the prior week low was a massive magnet. And you can see when it hit here, from the first touch, before it left it and went lower, there was 27 minutes. It spent 27 minutes. So that really was the main auction. So the point I'm trying to make here is that when you see price moving down, hitting levels, and you begin to develop a personal bias, it has to move up, it's rejecting these levels, have a look to the origin of the move. And here we see the origin is definitely the prior week mid. That rejection meant that there was going to be a high probability that it was going to find its way down to at least the prior week low. So hopefully that's made some sense. So keep a lookout always that when you want to take a trade, in this case, this looked like so much it was going to move up again from all these rejections, all these testings. But because it originated at the prior week mid, there was always this magnet, the prior week low, was going to pull it back down there. So that is the point I wanted to make there before I move on. I don't know if there are any questions, Ty. Doesn't look like it.
Not yet. Keep going. I'm loving this.
Okay. Now we're going to switch. This was a little bit of a licorice all sorts. Now we're going to change tack completely. And I want to, so there wasn't enough to talk about that for, a whole hour. So what I'm going to take out the replay function. I'm going to show you some other exciting things here. So I'm going to reset the chart view, and I'm going to turn the indicator off. As you know, I'm crazy about levels, but what I'm not crazy about, well, probably used to be, is cluttering up a chart with too many levels. But my kind of philosophy is, if there are other levels that come into play occasionally that add great value and don't take a lot of manual work, then I think it's worth having them around. So what I'm showing you tonight is just something extra. It's nothing you have to do. And it would be too much to code it, put it in the code. It would drain too much. And I've used up every bit of code I can with what I am. But I think you've probably realized by now that one of the key, besides, prior day, week, months, highs and lows, one of the key levels that determines price action are our POCs with our value area high and our value area low. And so we only really go back, to the past month, and we also look back at the 4 hour, the last 4 hour move too. Well, actually, no, that's mainly for our volume bands. But for our POCs, we go back, usually a month. But the POC for the quarter can also give us some good levels. So I'm going to show you how to do this. We're going to do it manually. And so I'm going to show, let me just tell you what I'm going to do tonight. I'm going to show you how to do quarterly POC levels with the VAH and VAL, which I'm going to do on the 1 minute chart, which is on the left. And then I'm going to do something really way out. I'm going to do a yearly POC with the VHL and the VAH on the 3 minute chart, which is on the right hand side. So first, I'm going to go across to my 1 minute charts, and I'm going to show you how to do this. Now, this is a little bit more advanced, so you don't have to do this. And again, sometimes these levels I'm showing you tonight, you may not see them for weeks, you may not even see them for months. But when they do appear, they can produce significant moves, which is what I'm going to show you tonight. So first of all, if you want to show a quarterly level, you divide the year into quarters. So we're almost at the end of a quarter, so we could almost draw a new one tomorrow. But that's not going to help us much because it'll be very early on in the month. So I'm going to show you how to do a quarterly levels for the first 3 months of the year. So we call it, the prior quarterly levels. So the first thing you do is, so I'm on a 1 minute chart. I'm going to change this to a 1 hour chart. All right, so the 1 minute chart on the left, I'm going to change it to a 1 hour chart. And in the 1 hour chart, I'm going to crunch it up. And I'm going to find the prior quarter level and extend those lines. So I can just scroll back like this. And so I'm going to make it more helpful, I'm going to do 2 vertical lines. So in the tools, I saved it as a favorite. I'm going to click on the vertical line, and I'm going to find the 31st of December. So here we go, December 18th. Where we go? There is the 31st of December. I go to the last candle on the 1 hour, which will be enough. So 31st of December, there we go, 11 o'clock. I'm going to drop a vertical line. And then I'm going to go back 3 months. So that'll be the 1st of October. So I'm going to go back to the 1st of October. And I'm going to draw another vertical line to the 1st of October. Where are we? 1st of October, Wednesday, 1st of October. It's going to be 1 o'clock in the morning there. So those are the prior quarter. All right, so I've put these vertical lines to make it easier to identify the prior quarter. Then what you do is there's a tool, I used it already, but if you go to this tool, it's about the 4th box down. You simply go to fixed range volume profile. So it's this tool. I've shown it before when I've taught on the POC, and you click on it and you simply take the mouse from that line and you drag it across to that line, which is the quarter. Doesn't have to be level, and then it's going to plot the fixed range volume profile. Now these are the levels where we get our POC. So this purple line is the POC. I don't know if I've made custom colors. This is our VAH and this is our VAL. So all I do is I simply go to the drawing kit over here, horizontal line, and I'll do the POC first. I plot the POC, and I've just used this bright color. I make the POC as I've done in our indicator. I make that 3 wide. And then all I do is I'm just going to clone that line. I just go to clone to get another one, and I drop it over the VAH over there. And then I'm going to change that to 2 thickness just so I can identify it. And then I'll clone this line again. And then I'm going to drop it over the VAL. So that is, now I've done that. I've now got the quarter levels that extend into January, February, and March. Now, there's a nice function that I like, that you can actually, if you right click and you go to settings, you can actually give a label. So I'm going to put this prior quarter, and that top line is the VAL, value area, VAH, value area high, and click OK. And then it gives me a label. So when I'm trading, I can see that. I'll do the same here. I'm going to go to settings, right click, settings, add a label, prior quarter, and this is the POC. Okay. And then with the bottom line, also right click on that line, go to settings, and you click text, and this is going to be prior quarter value area low. And then you click OK. And then what you can do once you've done that, you can delete all these other lines. We won't need these lines. So I'm going to delete that. I'm going to delete that other line over there. I mean, the quicker ways to do it. And I'm going to delete that line there too. So what I'm left with is a prior quarter VAH, a prior quarter POC, and a prior quarter VAL. So I've got that in the one now. So I'm going to change it to a 5-minute, just so we can see a little bit more information. And I'm going to go back to where price is currently at. Now you can see sometimes you won't see these at all. But you can see right now how these have actually come into play even on today's charts. So I mean here, for example, look at this. There was a test over here around the prior quarter value area low, rejected it, and look at that move down 940 pips. And you can see here too, this is the prior quarter POC. Look at price action. If that wasn't there, you never would have known what was happening. And even these little moves, double top, rejects the POC, there's a 500 pip drop. And all you have to do is to look back. We can see here, price came down. Look at this move started here. You can see how it stopped 920. There was a test of the prior quarter POC. Here's a straight trade from the prior quarter POC right down there. You can see there was a 500 pip drop. And if you just scroll back, you can see how often it comes into play. Sometimes it won't. Look at this. This is absolutely to the millimeter. So when was this? This was on the 9th of March. Price came down to the prior quarter POC, rejected that. Look at that auction there. Went up 1,266 pips. Again, look at this testing and rejecting. That's the opposite. Dropped 1,300 pips. Even if it doesn't go between, this is the VAH here. We can see it rejected the prior quarter. VAH produced 400 pips. So it's fascinating. Look at this here. You never would have known this. Prior week, sorry, VAH, I did say that. Price drops massively. Look, comes down. Where did it stop? Stopped 1,400 pip drop on the prior quarter VAH, rejected it. And after that, that led to a move of 971 pips. Then sometimes you'll see for weeks and weeks, it may not touch it at all, going right back to the start of the year. I don't think it touched it at all. So that is the thing. For months and months, you won't see it, but when you do, it produces massive moves. So let's just go back to where it came into play. So if you label it to, if I turn on the indicator, yes, it adds some noise. But remember, because it's prior quarter, the bands are very far spaced in between. So I'll just put it back on a 1-minute chart. So it doesn't add a lot of noise. Let's just go back to current price. Where are we? Reset chart view. You can see that most of the time it is way out of view. So here's the prior quarter value area low, and you can see the POC is way hundreds and hundreds of pips up. So you don't often see it on a 1-minute chart, but when you do, I would say take note. So let's just scroll back on a 1-minute chart. Let's just see where the first touch was. Would have been going back quite far. The first touch was, 28th of March, so going back. But again, you can see that just on the 1-minute chart, how price accumulated around here. When it finally did reject and break, there was a nice little move of 90 pips. So you don't have to do that, but that's if you want to do the prior quarter, value area low, POC, that's how you draw them. So they're just nice little extras to add. That's what I thought I'd do tonight. Then I'll also show you the prior year. Now, often that may not appear for months and months. So the prior quarter POC may not appear for weeks, but the prior year POC, you may not see that for months. So it doesn't take up any extra power. So again, it's something you may wish to add, not essential, but it can just give you another perspective and give you some good extra layers for Confluence. So to do this, we changed the 3-minute chart, we just changed to the daily. So we're going to change that to the daily. And then, can maybe use these 3 lines and just edit them. So they've stayed there. So on the daily chart, we're now going to look at the start of the year. So we're going to go and drop a vertical line. So let's get a vertical line. So we'll go to the 31st of December, sorry. So 31st of December, we drop a vertical line there. And then we're going to go back to the start of the year on a daily chart, which will be the 1st of January. And 1st of January will be, where are we? That's November. Okay. So there we have there was no trading down the 1st of January. So we've got the 2nd of January, 31st of December. Then use the same tool. I mean, I've got it there marked out, but you'd normally find it down here. Fixed range volume profile. And we just simply click on the first vertical line. We drag it across to the second vertical line. And then it's going to give us a yearly POC. So we've already got these lines drawn. So I'm going to just drag down. I must be on the wrong chart anyway. So I'll just show how this plays out. We pop that. So we're going to edit this because that should be prior year POC. So settings. I'm going to change this to prior year POC, PY POC. And then likewise, value area high goes there. Value area low is way down here. I'll just edit. Let me just get on the line. So again, I know I've said this a few times. These are not have-tos, but they can give you some great levels. So let's get prior year, VAL, and this is going to be our prior year VAH. So click OK. Then we can just delete these other lines here. Quickly clear them off the screen. Delete that. You can delete that. Delete that. Then if we change it back to, say, to a 5-minute chart, and we can see on a 5-minute chart, you may not often see these at all. So this is now the prior year. So let's just look back. We can see, look, there was this big move up here. Now, obviously, there could be some other lines, so never say never. But we can see here how this was a huge move. This was the other day. Where did it stop? There was a 1,500 pip move. Stopped on the prior year value area high. So if we click through, we can see here, look at this price action. Price broke under the value area high and then rejected it. And there was a move down 700 pips there. And look at this testing. We look prior year value area high. Definitely something to look at. We can see here a lot of testing, eventually a break above, and that moved up, 500 pips. So it won't often come into play. So we're looking at in March now, we can see there value area high, definitely coming into play. This moved down, look where it stopped at the prior year.
I'm sorry, Ed, this is pretty wild. Like those wicks and those touch points are pretty dang bang on.
I know.
I've never seen this before, and I'm really enjoying this.
And I've never heard anyone talk about it, but this is what happens. I sit and I dream and I get an idea, then I think I've got to try this. And then I just cannot believe how phenomenal it is. Just the price action around these levels is just crazy. So very often you'll see for months now, I think for the rest of the year, I don't think it came anywhere near those levels. So you can see for those months, there was no touching at all. So it only really came in the last month or two of the current year. But you remember, this will play out for the whole year. Once you've drawn these levels, this will go right until the 31st of December. So who knows what price does. It may come back and visit it. But it is absolutely crazy how you get wicks to the millimeter, absolutely testing these, and then you get the huge moves after them. It's crazy, really is. If we just look at the NAS, have we still got time, Ty?
Oh yeah, and I mean, yeah, by all means, loads of time. And I mean, even just bringing in some of our conversations that we've had around volume and around POCs and around orders, and you know, you've mentioned in this context too, like, you know, some people have their weekly or monthly orders and quarterly orders, and in this case, there's like annual positions and whatnot, and people adjusting them. And just bringing in everything that you've taught us on the POC and on volume, like, you know, 70% of trades are taking place, or price action is taking place, I say, in between VAH and VAL. And also the way you've spoken about when price, you know, expands and goes into, say, price discovery, leaving those zones or returning to those zones. Those are obviously where the power moves can sometimes happen. Please, by all means, if you want to expand on that stuff, because when you start to see these same things play out on these much higher timeframes, it's pretty wild.
Yeah, it is crazy. I mean, markets have memory, you know, and that's why the higher the time frame, if price revisits a higher time frame, there's always unfulfilled orders. I don't know how it works. I mean, I've tried to research more and more. I don't know a lot of the mechanics, but even I mean, this big move, okay, it wasn't a straight move down, but you can see after rejecting the prior year value area high, I mean, there was a drop of, 1,000 pips. So these are massive. If we look at, we'll look at the NAS. We'll do the year on the NAS. So let's just go to the NAS quickly.
While you're looking at it, I mean, I hope you guys are all getting this, and Dad, you can expand on it more, but it's like what you taught on last week, auction market theory, and bringing it in this context. It is understanding what is happening at these levels. And when you watch price wrestling and maybe breaking through and retesting and etc., it really helps. Like, it's helped me a lot, open my mind to what is actually happening at these levels, and allows you to step back and not just be consumed by, say, the indicator, but understanding price action and what is actually going on. And I can tell you now, guys, in all the years of doing this, I've never heard anyone teach on this stuff, but it's completely changed the way that I look at price action. Because it's orders based, it's volume action.
Yep. Well, let's just look at the prior year POC on the NAS. Let me just go down here on the NAS, on the NASDAQ. So we do the same. I've set it to daily. And let's just see what happens on the daily here. So we still got a bit of time, and I'll also do the quarterly, just so you get used to drawing these up. So we just put a parallel line at the end of the year. So we go to December 31st, draw a line there. Then we draw another line at the start of the year, drop another parallel line on January the 2nd was the first. So there we got the time frame. Then we do fixed volume profile, fixed range volume profile. We drop it across, and that gives us the POC and our VAH. So I'm just going to quickly pop them on there. So I'll make it 3 thickness. There's our POC. Here's our VAH, and I'll just clone that. Clone and drop it down. Oops, what did I do? There we go. This one. And then quickly pop in the label. So you just right click, settings. So this is going to be prior year VAH. And then we go to here, right click, settings. Remember, you only have to do this once a year. For me, that's good value. Prior year POC. And down here, right click, settings, prior year VAL. Then we just delete all the other stuff off the screen, and hopefully we'll have time just to do the quarterly too. I think that was quite good with the NAS. So then we just go back. We're going to put it on a 5-minute chart and just see. I can't remember when I was looking. So I was doing this, been doing this for weeks, checking this out. But let's have a look to see if any of those come into play in the first. Yeah, look here. So here we got the VAH. Look at this price action here. Testing. And the final rejection, this is on the NASDAQ, there's a drop of 600 pips. But you can see the price action around this, obviously a key level. If this line wasn't there, you'd never know why price was ranging for so long. And you can see here, look at this. This is the VAH. Look at all this price action around there. Let's just see if it goes. Again, look at this. Look at this. Wow. Multiple tests, and eventually when it breaks and rejects, it goes up 210 pips. So again, sometimes you may not see this for months. Remember this, these lines will play out for the whole year. If the market goes very bullish, then you may not see them at all. And yeah, it looks like we're back. Look at this. This is our VAH again. Look at this testing here. Comes back for a retest after that. I mean, price went up. I mean, there were pullbacks, but there's, call it 500 pips. So massive moves around these. I'll see if it drops any lower. Now remember, we can only go back to the start of the year because that's the prior. So I don't know if we hit it again. I don't think so. It wasn't enough bad news at that point. But anyway, you got the gist. That's the year. But let's just quickly look at the prior quarter. So we're going to go here, we're on the NAS, and we're going to change this to a 1 hour. So this will be normally would be the 1 minute charts. So I'm going to change it to the 1 hour, and we're going to do a prior quarter POC and just see how those levels, if they come into play. So for that, we want to go from, so I've got it on the 1 hour, draw a vertical line. I want to go from the end of December. So let's go, where's December? Here we go. 31st of December. Where are we? 31st December at 11 o'clock at night. There we go. So we're going to go end of December. And we're going to start on the 1st of October. So we just crunch it up and go to beginning of October. Here we are, vertical line. And October the 1st. Okay, then again, we just use the tool. You should know where to find it now. So this is the last quarter. We want to do the last quarter, then we're going to extend it. So that gives us the POC. So just drop in the lines again. There's the POC, value area high. We make that 2 points. And then we'll just clone that line and drop it down. Then we can delete everything else quickly. Delete, delete, delete. And then the labels very quick. You just right click, settings. This is going to be prior quarter VAH. Oops, what happened to my prior quarter VAH? And then here we go, right click, settings, click on text, prior quarter POC, and then finally right click, settings, click on the text there, and prior quarter value area low. Okay, then we're going to change it back. We're going to just use a 5 minute chart just so we can set of the 1 minute. So where are we at? So look at this. Look at this. Look at this. Wow, look at that. To the millimeter. When was this? Was this at the open? The market's open? No, that's with that big move.
Is that the exact same type of move and price action with the Dow?
Oh, look at that. Absolutely. On the prior quarter VAL. To the millimeter. That's what stopped price going up. And look at the big drop from there. Rejection drops 1,500 pips. You can see, look at the tests here. Multiple tests after that. These are good moves, 300 pips there. And you can see again, look at these rejections here. Price couldn't really break above, rejects there. And here's a classic. There's, auction market theory, 500 pips. Look at this one, rejection. Doesn't do it every time, but just showing you. Now, 540 pips. So just going back, you can see, look at this action here. Testing, rejecting, there's constantly, 500 pip moves didn't quite get up there. But just if you scroll back, I think you've kind of got the message before I hand back to Ty. You can see how accurate these are. Prior quarter levels are huge, testing, rejecting. All the time, prices visiting these levels. Here's a great one. Look at this. Comes down, double tests, moves up. 400 pips, went more. But look at the time. So many times these are massive. So think of confluence. If you got this on your charts, these are great for confluence. If you wonder why price is stuck at a level like, yeah, look how much price is respecting there. All this action, you can just keep going back. And you can't make this up. It's just incredible. Look at this, how accurate some of these levels are. A rejection there, classic market theory, drops 450 pips. I mean, normally, I'm on a 5-minute chart. So, I mean, that's what it normally look like. You're rejecting the VAL down to the PAC, 460 pips, and all the way back up again. Anyway, I mean, I think you got the message, but they're actually very easy to draw. For them in the prior quarter, you only need to do that once a year, and you can draw them tomorrow, the 1st of April. You can do exactly what I've done. You just go from, the start of January to the end of March, extend those lines, and then you've got some levels that can show. I mean, you can make it complicated and lag it a month. You can go initially from December to February. That's what I would do. So you kind of lag in those levels through a bit until the month is underway. But look, that can make it confusing. If you just do it like I've done it, you're going to get some very good levels. So Ty, I think...
Yeah, you preempted the next question that's waiting there from Angela. How far into the next quarter would you change the quarterly? So you just talked about lagging it, like say you're sitting in, January, February, say we were still in the middle of March. You'd be running one that includes all of December, January, and Feb. So you've still got 3 months worth of data, but I don't know, that does get complicated. But say you were just running January, February, March, quarterly from the 1st of Jan to say 1st of April.
I mean, you can do that. That's absolutely 100%. You will get the levels. So what it'll look like, you'll just see like 2 dots. I mean, they will extend left. So, but obviously, they would only be live from the 2nd of April, but they would still be very valid. So let me just show you. So I'll just do that now. We've got time here. I'll just do it quickly. I'll show you. If we wanted to do quarterly levels and not lag them, let's just reset chart view. So we're now on, let's say we wanted to do quarterly levels on the NAS. So what we would do is we'd simply go from the start of April is here, so we're still on the 31st of March. So we'd simply go to the start of January. Where are we? There's February. And I'll just copy the lines across. So we just draw a vertical line. Where is the start of January? 1st of January. Where's that line? Can we go 1st of January? And basically we are on the 31st of March. So you could just draw your fixed volume profile to this current candle. Like that. That'd be pretty accurate. And then you can just drop these lines. And you could let that run for the whole month, just like that, for the next 3 months. And then they were just basically every day, those lines would be there, and they're based on the previous quarter and could give you great levels. That's the simplest way. You don't have to make it too complicated, but that's what you can do tomorrow morning, first thing.
Very cool.
And you're going to get some really good levels there. There's no doubt. You're going to get some really good levels for auction market theory and for taking trades.
Very, very cool. I'm just going to double check a question Tim had. Or you've been basing yours on your 1 minute chart. I don't imagine it's going to matter whether you put it left or right.
Yeah, so no, I'll make that clear. I put the prior quarter on my 1 minute chart and the prior year on my 3 minute chart.
Got it. Hope you all got that. There we go.
So, I mean, you don't have to. You can do it. So this is the PY. You can see my 3 minute chart, PY value area high. So I've got the yearly POC, prior year POC on my 3 minutes and the prior quarter. But again, it's good value. This you only have to change, once a year. That's all. And this 4 times a year, you change this one. And it's going to give you some very good levels that price is going to respect.
I'm kind of floored. I've never seen this kind of stuff before. So guys, I'm right with you in the trenches learning this stuff. Your homework is going to be draw the levels and go back and see how many touches you start noticing on these levels, because that's going to reaffirm to you why it's worth drawing them. So
they become, I'll say one more thing, they become really, really important. Like they have been more important in the last month, where prices, because of the fundamental analysis, when price moves sideways, it tends to come back into these ranges. Like if you did like gold, the prior year on gold, you'd probably find, the prior year POC VAH VAL are way out of range, way too low. But it's when price comes back, that's why you may not see them for months, but when they do, man, they're so powerful. They're really good.
Yeah, I can visualize, based on a volume curve, where those are going to be. And obviously that value area high on something like gold or silver, etc. If price starts to drop and come back to those earlier levels like the POC, that value area high is going to be a line you want to have on your chart because price will react.
Yep.
That'll be really interesting to draw. Well, Dad, thank you. Once again, as always, over-delivering some stuff that is nowhere else on the internet. That's very special, guys. Thank you. Thank you, Dad.
All good. It's just part of the fun journey we're on. I love this. This floats my boat, Just
there you go. Jordash's mind blowing. Yeah, it's I'm right with you guys because this is the kind of thing like when you start going down this rabbit hole that Dad's been on volume and orders that we've been talking about for a long time behind the scenes, it starts to recalibrate the way you think about everything in the market because it's orders. These candles are moving because of orders. They're not moving because of moving averages. And that is a huge shift that most people never make. And this allows you to kind of have some cheat code level lines on your chart because it's the orders that cause these things that cause price to react. So as always, Dad, thank you. Thank you. Thank you.
All good, man.
We're a minute away from 9, so that's probably us for tonight. But ain't any more questions. Just a whole lot of gratitude flowing in the chat right there. So guys, go and draw those. You've got a few demos on how to do it. Go and muck around with that fixed volume profile tool, drawing some vertical lines. And what I was saying in response to Wendy's question in there, depending on your trading view plan, I'll tell you what, Dad, why don't you unshare your screen and then we'll, if depending on your trading view plan, you cannot scroll back far enough, the limits are usually placed on the number of bars that you're trying to look at, not how far you're trying to look back. So for instance, I can guarantee if you jump from a 1-minute chart up to a weekly chart, you're going to be able to look at probably a few years worth of data. So if you've got any limits on your trading view plan, even if it's a free one or the lowest one, just try up in the time frame to get as far back as you can. And I can guarantee it's not going to throw the profile out majorly. If you're starting that profile somewhere in that day, it'll be slightly different if it's somewhere in that week, but probably not mission critical. So see how much
we can do. We can just, if someone can't do it, we can just drop the levels into our chat.
That's it. Because those levels are at certain, if you're on the same chart specifically, it's going to be a horizontal key level that we can help you identify. Because you can right click on a level and click adjust and actually write the exact number like on the price that you want it to be. So I would do that with, if I was drawing fibs, and I wanted to magnetize to certain levels, I would highlight over the candle, look at the, open, high, low, and close levels at the top, see exactly what that number is. And then if I wanted to drag it across to the right-hand side and not have it magnetized on the candle, I would manually type in those levels to get things exact. So we could do that as well. Great idea, Dad. So try zooming out, see how, if you can get to a 1 hour or 4 hour and get as close as you can to within at least that day to be able to drop those lines and then draw the anchor. But yeah, mind blown. Very, very cool. Guys, thanks for tuning out tonight. Thanks for watching live. Thanks for being part of our beautiful community. It is beautiful because of all of you. And again, Dad, thank you. That was gold. So we'll see you in the chat. We'll see you on Thursday morning for live analysis. We'll drop some details and Zoom links and things Thursday morning for that. Otherwise, trade safe. We'll see you soon.
See you guys.
Good night, everyone.
Night.